Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the three major US indices. Just before we get into today's video, anyone who's interested in joining my Signal team, then make sure you join my Signal team by following the link in today's description. That's of this YouTube video. If you scroll down, click on the link, which is dailymarketmovements.com. It will bring you to my website where you can sign up to my Signal team simply by scrolling down on my website and subscribing under the monthly subscription section. But let's get started with today's video. S&P 500 currently trading at 5,171. We haven't really done much during today's trading session. We're down 0.10%, so let's just call it flat. But that's healthy. We're consolidating up at an all-time high, especially after yesterday's very strong gains of 1%. So I like the fact that we're just trading flat today. We can't continue to go up and up and up every single day. We have been doing so for a very long time. In fact, now is I think it's the sixth longest time in history that we haven't seen a 2% drawdown in the S&P 500. So, we really are, running very, very significantly here for the S&P 500. Just look at that 50-day EMA. We haven't even backtested it for a very long time since we broke through it back in November. So, it's just been pointing up, and same with the 200-day EMA. Then just moving over to the Nasdaq100, we currently find ourselves trading at 18,060. Again, we're just kind of consolidating the gains that we've seen as of recent. We've been pretty choppy over the past couple of trading sessions, but we still trade very healthily within this uptrend. One thing I would say is that today we're seeing a lot of money flow out of names like Nvidia, names like Microsoft, for example, Apple, some of the high flyers so far this year. Look at AMD. AMD's down nearly 4%, and we're seeing stocks go into other names such as PayPal, for example. The other 497 stocks that haven't really participated that much in these huge rallies that are kind of being camouflaged by the Magnificent Seven. So that's healthy. That's what you call rotation and broadening out in the market, and that's it's definitely a healthy sign. Then finally, just moving over to the DowJones30. Dow Jones attempting to hit a brand new all-time high today. That is running at 0.5%. As I mentioned, we're seeing some broadening out. We're seeing stocks like JP Morgan, for example, that just hit a brand new all-time high today of $190 a share. So that's very healthy, and that's obviously helping the Dow Jones 30 trade higher. One thing to keep an eye out on is the US dollar. We're seeing this temporary bounce here. I think that this could potentially continue, but ultimately I do believe that we are going to continue this trend towards the downside. And then just quickly moving over to a 10-year yield. Again, we're seeing a bounce here, very nice bounce off those lows here on the 4-hour chart on the RSI, where we had that 30 oversold reading, and we're now approaching 70. So I do expect this bounce to fade and for us to ultimately continue the downtrend, especially as we go into the next couple of months, for the 10-year to break back below 4%. And I think that ultimately will help the US equity market continue its rally with the support of a decreasing dollar and of course decreasing yields. So yeah, I'm still very, very, very bullish here. I think that ultimately we are going to get a correction. The market doesn't continue to trade higher forever, but I would definitely be a buyer on that dip, as the economy is still very strong, and US equity market is still very attractive, other than the Magnificent Seven, that being